Welcome to the Edge Market Update for the close at June 16th, 2023. And we had a very sharp rally again in commodities this week as hedge funds have covered their short positions and actually flipped long on the risk of weather concern and drought concern in the Corn Belt. They did not want to be short before a long 3-day weekend in a weather market, and we are truly at an inflection point here early on in the growing season as the crops don't look good. We've had record high estimates for yield production by the USDA, and so we will see how much those get hurt over time. But over this 3-day weekend, funds did not want to hold short positions and sent prices rallying higher at an extreme pace. One of the biggest rallies on a weekly basis in quite some time. So we'll go ahead and get started with November soybeans. And we took out this downward trend line that I had pointed at as resistance last week, that 1247 level. We cleared that easily yesterday, closed above it, and added another sharp gain today, another 50 cents up to the divergent trend line from the January high and then the February lower high, and now we're back at that resistance. We had an extreme amount of buying today. Just look at that green candle of how much volume came through to buy back these contracts. Strength indicators are extremely overbought now. They're extremely strong. That's what we want when we want to sell commodities, is we want to sell into strength. Money flows are also extremely strong here, and long-term momentum is still technically negative, but definitely trending back towards a neutral market. But as we move forward this week, we're currently at resistance at 1343. That's where we closed today. Truly, the weather forecasts are purely going to be traded next week. So, we could continue to move higher back to this $14 level. The crop insurance price is at $13.76. I personally would really like to see that tested again. But if we get some surprise rains over the weekend, or they put rain back in the forecast for next week over this weekend, we could easily see a drop down to this level, even lower if we do get some rain. So there's a reason why hedge funds brought it back to this level and it closed at resistance. And truly, we will find out what happens here on Monday night when futures open back up. For new crop corn, we also broke above that long-term trend line back from the October high, the lower high in the end of December, and we broke above that yesterday, closed above, and now we are back at 598 resistance, where that really acted as good resistance during February when the crop insurance price was established. So we closed right at that level. If we do get above there, could see it test that 606 to 614 area, and above there would be about 630 where good resistance is at. Below, really don't want to see us lose that 575 level again if we can avoid that, and then obviously that trend line that we broke out of will act as support as well around that 565 area. But definitely very strong rallies. This trend line is very steep as well, so that would act as some support, but a lot of these moving averages now have to catch up. The move happened so quickly. Back to November beans, we rallied over $2 a bushel within 15 days, less than 10 trading days. And then corn, we've rallied over $1 per bushel in a little bit longer amount of time. So just an extreme move in a short period of time. And that's what happens in weather markets. Technical indicators kind of go out the window a little bit because the moves are so unpredictable and violent. But again, a lot of buying volume here on this contract. Strength indicators are extremely strong. You can see over the past year, we haven't been above the 70 level on strength indicators, and we're at 75. And less than about a month ago, we were under 30. So it's just been a violent move with a lot of strength added as they've added premium to this market. Money flows in the short term, very overextended as well, very strong. That's a good thing when we're looking to sell things in the short term. But it doesn't mean that this market's topped out because we're purely trading weather at this time. but it is very overbought. We do know that. Long-term momentum, we are back to a neutral to slightly positive place on new crop corn, so that is really good to see as we move forward here. Old crop soybeans, we closed just above that long-term resistance line from that March high and then the divergent high in the middle of April, and we closed here at 1466 today. So we have a cluster of support through here. Ideally, we could test maybe that 1480 level, but again, this market is very strong, very overbought, and we're still negative in the long run here. This contract will be expiring soon. We'll go to September. But again, if you do hold old crop soybeans and you didn't like how 1270 looked, maybe a time to start considering liquidating those beans if you need some money for cash flow purposes on the farm. We are above all these moving averages in the short term here, so those have to play catch up. But this trend is so steep. As long as the weather is dry and hot, it could keep going higher. But if they do switch that up and we get some rains, we've basically gone straight up, and support could easily be lost on a violent move to the downside. So keep that in mind. And then to finish up with old crop corn, we broke above that negative trend line from the March high at about 665, 670. And then we closed above that, right at it yesterday, closed above today. And next resistance I have here is about 645 or so. That would be the next place where I would consider selling some old crop corn if you have any left. Above there's this cluster of resistance anywhere from 660 to 670. I think that's fairly good resistance. If you have any left up there, definitely would be a good spot to drop that. Again, we've had a lot of buying volume on this contract. These strength indicators are very strong, and money flows weren't quite as strong on old crop corn. We've definitely seen a stronger reaction out of new crop corn, but they are strong, and if we can get above there, those money flows would be triggering a sell signal again as well. Long-term momentum is actually back to positive on corn here, but resistance is at 645 level in the short term. Again, we've had a steep or a very, very sharp increase in price here, so that trend line is so narrow. It wouldn't take but a bad day or two to really start losing support again if we get some bad fundamental news. So it's a key inflection point right now. Something to consider if you are sitting on old crop and if you haven't made any new crop sales. I really don't want people to feel the pain of what it was back when we were in the low fives on new crop corn. So maybe worth taking some action if you'd like to. But if you have any questions on what we talked about today in this video, or if you want to go over different option strategies or how you can place price floors without giving upside potential away, or any type of decisions like that, please give me a call. We have those contacts that can help you out and make a good decision in a volatile time of the year. Hope you have a good weekend. Happy Father's Day, and thank you for watching.